All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. I hope you're having a fantastic holiday season. Today is going to be a holiday shortened trading day. In the markets are only going to be open till 1 o'clock Eastern here today. And then they will be closed tomorrow and will reopen and have normal hours for the rest of the week here. And then next week, it's just a very simple market closed on Tuesday and open Monday, Wednesday, Thursday, Friday. So that's what's going on holiday wise. In terms of the market. In terms of the market, we're seeing a lot. A lot going on. Last week was one of the worst weeks in market history, and you look at some of the metrics comparable to 2011, comparable to 2008, the financial crisis, and when you deal with a holiday shortened trading day, something the day after Thanksgiving, or a day like today. Most times, it's not a major game-changing type of day. Most times, it's just, market shifts a little bit here or there, and, calls it a day, moves on. The environment's very different going into today, and the environment out there is one of a lot of fear. And could today be a little bit of a changing type of day? It could, right? There's a chance because of the overall environment. There is a chance, but it's not a great one. It's not something where that would be normal. Now, what is a little more normal is to see some sort of major change post-option expiration, and we did have option expiration on Friday. And so, I'll be on the lookout, if something does shift or change. The reality this morning, option prices aren't going to get a whole lot cheaper. And, the market isn't exactly showing any signs of switching. But bottom line, a day like today tends to come down to a singular catalyst. And sometimes that catalyst is bullish, sometimes it's bearish. Well, the boys in Washington tried to make it a bullish catalyst, but in doing so, they may have gotten a little backfire here. Bottom line, Steven Mnuchin, who is the Treasury Secretary, reached out to the banks yesterday, the major banks, and wanted to get an understanding of where they are and their liquidity, and if they can handle a little some of this economic turmoil that could be coming, and basically came out with reassurances that hey, you know what, the banks can withhold stuff in an attempt to calm investors. Well, when it was reported, when it came out, you can see what happened to S&P futures. They dropped 40 points. Okay, they fell 40 points. Those types of assurances from government officials historically don't give the market a lot of assurance, especially when the market looks and fears the other way. It's the same thing as the Fed coming out and saying, oh, no, the economy is going to be fine, and we're going to keep jacking up interest rates despite a flattening and inverting yield curve because, employment looks good. The market is a little more sophisticated than that. The market understands, hey, you know what? We're seeing this metric, this. They're all shifting. They're all changing. Yet you're stuck in the same ideology, the same methodology of jobs. And so, surprise, the market doesn't trust the Fed. It's the same way with the Treasury Secretary this morning. You look back, for those of you that traded back in 2007, 2008, every other week there was a reassurance from the Fed or a reassurance from the Treasury Department. There were all sorts of reassurances that came in, and the market tends to sell those, and that's what we've seen here this morning. I look at what actually took place, what actually transpired, and I think in a normal market condition, it wouldn't even be a headline. It wouldn't even be something the market cared about. It'd be something so routine, so mundane, the market would just be like, yeah, whatever, and be moving on. But that's not the environment we're in, and that is the catalyst that's out there this morning. That singular catalyst that will be the driver. So we have this confluence of the Treasury Secretary in the comments there, President Trump irate over the Fed raising rates and all of that. Okay, great. That story continues, and then we have this option expiration element where we had quadruple witching, and it can be sometimes a pretty game-changing type of thing. The market conditions are about the same. It's bear market conditions all the way. The metrics are strongly bearish, and it's one where it is incredibly oversold. In fact, this market is more oversold than we have seen really since 2011. I think that's the last time we can go back and talk about it from a technical standpoint, being this oversold. But whatever overbought, oversold indicator you want to put on, you're going to find oversold. And, it's one where market rarely does the MFI break below 20. And we saw last week the money flow index break below 20. If we come back and we put on, just something like 10 years here and just look at the money flow index over 10 years, you can see it down here. It dipped below here in the beginning of 2014, the end of 2016, dipped below here just now, and then it dipped below about twice a year during the Greek crisis, and all of that, the European Greek tragedy years and some of the Fed quantitative easing years. But that's what the market's looking at. Oversold to that type of a tune. And you can see that while, yes, it would happen once or twice a year back here 2009 to 2013, it's only the third time in the last 4 years that we've seen the market oversold to this point based off the MFI. Now, that's just based off the MFI. I mean, if we go and we compare it to other, overbought, oversold indications, you look at the MACD, which can be an overbought, oversold indication, but MACD is at -6. Market hasn't seen a MACD at -6 in the last 10 years. The MACD wasn't at -6 at the end of the financial crisis bottom. The MACD wasn't this low. MACD wasn't this low at the bottom of the European, Greek crisis. Market wasn't this low during the Trump election, and all of that situation that occurred. It is one where when you go and start slapping some indicators onto this market in terms of overbought, oversold, we're starting to see things that, are not absolutely rare or unusual or not. We can't kind of use that term. We can't use that term to say, oh, well, this is just unheard of and crazy. No, we see this type of thing happen very rarely. And one of the fears is that when we start to see stuff like this, right? When we start to see stuff like this, we tend to see it cluster a little bit. And that was the case in 2008. We started to see oversold conditions come in that were pretty historic. The last time we saw the MACD this low was after the September-October rout in the market there in 2008. It wasn't when the market hit a new low in 2009. But and it has a lot of people on edge saying, we're probably going to see more and more selling. And I would agree that given everything that we've seen, without some sort of massive catalyst, we're going to see a little bit more selling come in. But I would be surprised if we don't see it off of some sort of bounce. The market is very slanted. It's very tilted right now. And one of those where we haven't seen the market tilted in this type of a fashion in a long time. It's not going to take much to kind of jar it and see some sort of, hefty rally. But so far, just hasn't had any kind of catalyst, for that, and continues to, march, march substantially lower here off its highs. In the big picture of the bull market, right? I mean, yeah, you can see it's just not all that much, right? It just really is not all that much. But in technical terms, we're talking about bear market, 20% drop, those types of things. And, more importantly, from a trade standpoint, a complete lack of price stability. And, things that are going to be moving, market moving at 2, 3, 4%, in 15, 20 minutes type of stuff. And, that's going to continue, until we start to see the metrics shift and change a little bit. That element will remain high. And, I'd contend the option environment for option trading in terms of the pricing on options really has not been worse since, since I've traded options. And I traded through the financial crisis. I traded through the Greek stuff, the flash crash, and all of that. And, just from a general standpoint, option pricing is, market makers have caught up a little bit to, some of the what used to be really interesting opportunities where you could get for very low dollar amounts and know, okay, you know what, this thing could really fly your way or drop your way. And they're just not. They're not at those type of pricing levels that we have seen before. So, so for me, for the challenge, I need my next trade to really be solid, and the odds to be in my favor. And this is not something that I'm waking up to and going, oh, okay, odds in my favor. Option prices are going to be a little bit better, compressed. Now, the spreads are going to be pretty high this morning. The option implied volatilities on some stocks, they're not going to be coming down here this morning, at least initially, right? And, if we do start to see a little bit of game-changing type of action, I will look to jump on it here today. I'm not going to say, oh, well, shortened day. Let me just sit on my hands. But if we do see, some technical signals off of that oversold area into a little bit of a buy area, I will look to jump on those and go. But as we look at it initially this morning, those are not in. I wouldn't be surprised to see the market open up and sell off initially. And, in the first 30, 45 minutes, see some sort of hefty sell and then get bought up the rest of the session. I do think that if the market does get bought up initially, we're probably going to fade again into the close. But those are suspicions there. Not something I'm willing to put a ton of money on here just yet. But we'll be looking to, as the day progresses. I know many of you are busy, holiday plans, family, and whatnot, finishing up at work, those types of things. So any trade I make, it'll go out. It's not going to be something where, I expect the price to change immediately or something like that. It'll be something set up for the rest of the week. If I do go set something up, and we'll look to do so most likely closer to the close of the market today than to the beginning of the market here this morning. Again, thanks for hopping on. Hope you're having a great holiday season, and we'll talk to you later. Take care.